Good morning, traders. I'm going live right now, Infinite Dream, so you should be able to hear me. Anyway, welcome, traders. Welcome, everybody, this morning. This is the Gamma Edge pre-market prep. This is Michael coming to you from Gamma Edge on Wednesday, October 15th with our pre-market prep session. As always, we'll cover three pillars here: sentiment, structure, and trend, as well as individual equities that our audience wants to cover. So at the end of this, I'll pull up our web app and you can throw some individual tickers into the voice chat or into the chat, sorry, on YouTube, and I'd be happy to go over those. So let's quickly start with our trend, our market trend model. This is what we base basically the initial indications of where the market is going. This is based on the tick index. It is buying versus selling in the overall market. You can research that at your favorite investing website. As always, quick orientation, the bolded white CT or the bolded white line is our cumulative tick. We placed some moving averages on here for momentum indicators. And then our colored ribbon is our longer look back period. This is how we position our money for extended periods of time in the overall market. As always, we look at the breadth indicator up here. This is new highs versus new lows. Obviously, you want to see new highs outpacing new lows, indicating that more stocks are being bought than sold. And then our filtered cumulative tick indicator, plus 1,000, minus 1,000. This is larger block orders, obviously institutions and larger market participants. Yesterday was a significant up day within the filtered cumulative tick, so more stocks were being accumulated rapidly than being sold. So that's the second day we've seen the filtered cumulative tick at least above zero, but yesterday was a significant move to the upside, as you see by the indication over here after multiple downside days and the resulting pullback in the overall SPX. And their cumulative tick significantly above, obviously, the zero line, but pushing the 244,000. So that is a large number that stocks are being bought and accumulated. Yesterday, the tick US, this is all exchanges. This is kind of what we call our noisy exchange. It includes all the exchanges, and then we'll look at our quality tick, which is what we base our mechanical portfolios on. We almost emerged outside the colored ribbon yesterday. This is going to be a key inflection point for bulls and bears. We want to see this bolded CT emerge above this colored ribbon, maintaining the status above the ribbon. That will pull this red line up, and then we'll have a red above cyan cross back to the upside, indicating we may be starting another uptrend. Let's go ahead and move on to the tick RC. This is a little bit more quality tick. This is pay for play exchanges. So we like to look at this for mechanical portfolios. We have two mechanical portfolios, P-Trans to PGEX, as well as our wheel strategy. So both of those mechanical portfolios will be turning back on today as the cumulative tick moved above the colored ribbon. Now we are at, again, as I stated, an inflection point. So this could quickly fail. This is our first day of entering back into the mechanical portfolios, so we'll manage our risk appropriately. If this trigger indicator fails at the end of the day, which would be the cumulative tick moving below the colored ribbon, then we'll exit those. If we maintain above the colored ribbon, we'll stay with those positions and maybe starting, as I stated, another uptrend. So again, an inflection point, first day of moving back above the colored ribbon. We want to see this maintain the cumulative tick above there, and that'll pull this red line, which is a moving average, back above the cyan and start expanding to the upside. We'll also be watching these shorter term moving averages. These are 1 to 3 day positioning, as well as our instantaneous intraday CT. We want to see these moving averages continue to move to the upside from lower left to upper right, and the bolded CT stay above those moving averages. So I think we've colored the market trend model significantly here. You can look at all of our previous videos, as well as move on to our blog at gameedge.us. We have extensive education about that, as well as some courses I'll discuss at the end of this presentation. All right, moving on to the SPX options complex. This is the largest, most notional value. That's why we look at the SPX. We are the only service that separates the SPXA from the SPXP. The SPXA is your cruise ships. These are institutions and larger market participants that are basically steering the overall structure. And then we have the SPXP, which is our speedboats, and those determine your intraday price action and structure. 0DT would be included in that. So SPXA, we are still call dominated above and below spot price. All that states is that the net delta is green above spot price. Majority is call dominated, out of the money call speculation, as well as below spot price left hand plane is call dominated, net delta, green net delta here. We notice the transitions here. We want to stay above the transition area. That puts us in a more favorable call dominated positive gamma environment and structure for price appreciation. If we're within the overall transitions, this can be extremely choppy. And if we're below transitions, that puts us in a little bit more weakened state. Again, we're still call dominated below spot price though. So again, any pullback in this area should be supportive unless the structure continues to erode. Now, if you look back at previous videos from the past few weeks, when we were in a significant uptrend, this net delta column was completely green above and below spot price. Virtually no puts were being exposed, and put speculation was basically non-existent. But as we've had the pullback, we've seen some closing or expiry of the calls, and then we've had some put hedging, obviously exposing in the money puts above us as well as out of the money puts below us in speculation. So if you're a bull, you want to see this completely change back to green, net delta, out of the money call speculation, and in the money calls below you. If you're a bull, you want to see the structure, or sorry, a bear, you'd want to see the structure continue to degrade. You'd see out of the money speculation to the downside via puts, and these in the money calls would be overwhelmed or swamped or eventually closing as we head into the monthly expiry this week. Now, where all of this gets deployed, all this money after the expiry will be important for the Q4 as well as the November structure and positioning. So we'll continue to watch that day over day. All right, moving on to the SPXP. These are our speed boats. Basically, this steers the intraday price movement as well as the overall structure. You'll notice via our web app, all expiries are turned on here. We'll move on to 0DT here in a few minutes, but we're put dominated. So obviously compare that to the SPXA structure. We have significant amount of puts above and below spot price. So again, this is a bearish overall structure as of now. You'll notice the transition area is here. We want to stay above transition to give us a little bit more anticipation of price appreciation, even though we are put dominated. We do see some out of the money call speculation to the upside. We see PGEX up here at 6,800. So again, we want to see, if you're a bull, you would want to see all these in the money puts be overwhelmed by out of the money call speculation. We have some tools to look at that, or see these in the money puts as price appreciation continues. There is some fear component that you lose the intrinsic value and your gains. So obviously you would close those, monetize those, and then that would remove these in the money puts as well as the out of the money put speculation. You want to see this start to fill in with in the money calls. Obviously that would be via a removal or a closing of those out of the money put speculation, or just an overwhelming swamping of in the money calls being bought below spot price, indicating that market participants are anticipating for significant price appreciation. So takeaway, put dominated, bearish structure in the SPXP, all expiries at the moment. All right, let's move on to the GEX ratio, XPSP GEX ratio. Basically, this is like a put call ratio, but the ratio is the short dated call gamma versus the short dated put gamma. As always, all of our charts here at Gamma Edge are interactive. So we do have a slight positive slope, but we're not above the 1 level. So this again is still indicating that bears or put speculators are maintaining overall control of the structure, which we just reviewed on our web app. We did have a significant SPXP price appreciation, but without the resulting increasing in the SPXP GEX ratio. So again, this is a divergence. We want to see this in confluence with SPXP price rising, short dated call gamma, which is out of the money call speculation going into the overall complex. That would drive this ratio above 1, as you have your short dated call gamma versus your short dated put gamma, gives you the overall ratio. So we're not seeing the resulting increase in SPXP GEX ratio at the moment. So if we do have an upside day to day, we definitely want to see this ratio increase above 1 fairly significantly, indicating that call speculators and bulls are trying to take overall control. All right, moving on to the delta balance. This tool basically just separates the overall positioning from right-hand plane, left-hand plane in the structure. Right-hand plane is above spot price. Left-hand plane would be below spot price. Resulting left-hand plane is your red dotted line. The green dotted line is your right-hand plane, which is above spot price. And then the delta balance is the aggregate of the two. With this tool, you want to see all of these above 0, indicating that call domination or call speculators are taking control, which would be the overall bulls, and they're speculating above price with the green line, the right-hand plane, or they're speculating within the money calls, at the money calls, below spot price buying deep in the money calls with the red dotted line. Now, we do see the red dotted line starting to emerge above the zero line, again indicating that call speculators are trying to take control. And then the green dotted line is still well below zero, and the delta balance is down around -1, but significantly below zero. Now, these lines out here are further expiries. We want to see obviously those appreciating above zero and being maintained. That would indicate that the structure is shifting to a more call-dominated favorable environment for price appreciation. We're seeing a short blip in that into the 17th, which is the monthly expiry, and then we start seeing a degradation of that overall structure back down. We do see the right-hand plane trying to maintain above zero, but again, on out in time, it drops below zero. And then the aggregate, which is your delta balance, as well as the in the money, which is your left-hand plane, continues to drop below zero. So we want to see this significantly improve. We want to see all of these lines maintaining above zero after the monthly expiry if we're going to have significant price appreciation, or at least being able to maintain the price where we're at right now, pre-market, and through the end of the week into monthly expiry. So we'll watch this intently day over day to watch for positioning, to see if market participants are positioning above price or below spot price, and to see if this continues to show a weakened state on out with expiry. SPX net stack command, this is the highest sensitivity levels for the day. Again, 6670 in the money calls below us, 6705 in out of the money calls above us, and then our net charm level, as long as we're above 6650, this will continue to be supportive. But you'll notice the right hand plane integral swamping the left hand plane integral, so we're going to have a headwind of this out of the money calls charm continuing to grow throughout the day if we're below 6725. So again, that would be that first area to look for stalling. Gamma, high sensitivity levels, as well as Vanna, you can review those as we continue throughout the day. SPXP 0DT structure heading into today. Put dominated, but our net GEX is very low, so we're within the overall noise floor of this being able to flip to call dominated depending on where the implied open is. If we start capturing a significant amount of out of the money calls to the upside, or driving these in the money puts out of the money, then this may cause some fear, some monetization. If those start to close, obviously removing negative deltas from the overall SPX structure, but we want to see the resulting out of the money call speculation coming into the structure via our intraday volumetric tools that we have available to our members in our Discord. So if we see the mass of volume coming in, being transacted above spot price with out of the money calls, obviously those are adding positive delta to the overall structure. Market makers and dealers have to hedge that positive delta. So the resulting is they are short those calls. Obviously, they would have to buy to hedge. This would most likely drive price to the upside. Now, at the time of looking at this, I was looking at the implied open. We were roughly around 6695 to 6700. That's that first gradient that we're going to be looking for price interaction. If we get above 6700, we have the opportunity to drive up towards 6725, 6730. See a significant amount of gamma up here between 6700 and 6715, 20. We already covered that on the net stack command, where that significant out of the money call charm will be coming in at 6725. So again, that would be that area to be looking for stalling. Now to the downside, if we start seeing some rejection reaction around 6700, possible profit taking via the gap up, out of the money call speculators, if they held overnight, want to get paid for their risk overnight. So anticipation is we might see some stalling and pullback right at the open from some monetization from call holders. Pullback to the transition area is going to be vitally important that we hold above that area to maintain us into a more positive gamma call dominated structure. At the very least, we need to hold above the drunken sailor range. Drunken sailor range is a very low exposure area. If we drop into that area, it's going to be very easy to push price around depending on what market participants are transacting, whether they're transacting out of the money calls or out of the money puts, which we'll be able to see via our vol M command as well as our vol D command. If we get below transition, we'd anticipate a significant weakness or a little bit more weakness as we move down towards the bottom of the drunken sailor range, COTMP, this is where out of the money puts go in the money, and then all the way down towards 6600 via the below the drunken sailor range. We'd be a little bit more risk off and cautionary. So key areas for today: transition, need to stay above 6670 is PGEX. need to stay above that, as well as the top of the drunken sailor range for bulls to try to maintain overall control. You see COTMC up here. We've already discussed that. That's where out of the money calls go in the money. Historically, we see that as a monetization area. So some key points for us to stay above today, as well as watching the market trend model is going to provide that mosaic to see if we're going to most likely be supportive, and if bulls can try to start taking overall control, or if bears are going to rear their ugly head if we get below transition and we see the market trend model fail, which historically we'll see that fail pretty quickly at the open and drop back below those moving averages. All right, moving on to the trading view chart. I've already outlined key areas for today. So we have our TradingView scripts that are available for TradingView and Thinkorswim. This allows our members to overlay our key gamma delta levels. We have an all expiry script, which I have overlaid here, and then I'm manually overlaying our 0DT transition and drunken sailor range. You can do that vice versa. We have a 0DT script if you're mostly a 0DT trader. I'm mostly a little bit longer term positioned to swing trader, so that's why I overlay the full expiry, and then I just overlay the 0DT areas just to get an idea where we're at intraday. So 66.85 for all expiry is going to be key transition area to stay above. A little bit more call dominated positive gamma structure, as well as zero gex is going to be vitally important, at least on all expiries. And then that is a confluence of the 0DT transition areas. So when we have a confluence of all expiries as well as 0DT, those areas become extremely important to watch intraday, as well as our drunken sailor range. And again, if we get below 0DT transition as well as 0 gex, I'd anticipate more weakness down towards in-trans level. Have to hold above the in-trans level and at least the bottom of drunken sailor range to be maintaining an overall positive structure heading into today. All right, hope that helps everybody. Pause the player if you want to look at our 0DT levels. And again, come join us. This is gameedge.us. This is our website, landing page. Come check this out. Newsletter. This is our Beyond the Bell newsletter. Put your email in. You'll be sent that on the weekends. Goes over our philosophy, our tools, how we look at the SPX option structure. Talks about our mechanical portfolios, P-Trans to P-Gex that outperforms SPX and SPY buy and hold by a significant margin. Come check that out. Free courses, Game Edge Fast Pass. This covers all of our methodology. So if you want more education about what I'm discussing today, as well as any content we posted previously, check that out. Put your email in. You'll be sent those, as well as 2 other free courses. Again, all free. Our education here at Game Edge is free. We want to help traders be profitable and get up to speed and kind of dispel a lot of the rumors around gamma, delta, as well as the SPX option structure. And as always, click on the pricing tab. 14-day free trial. Our community continues to grow and explode with, sorry about that, with traders of all backgrounds, former market makers and money managers, all the way to new traders, learning our Game Edge ecosystem. And we have our team in the Discord trading every day with you, not just throwing you to the wolves and saying, here, use our tools. And just extensive commentary in the Discord throughout the day, and a great group of traders helping each other. All right, moving on. Let's move on to individual equities. If anybody wants to look at certain individual equities, I think I saw you previously, so we'll go ahead and look at that one. Throw the tickers in the voice chat. I'll go ahead and cover them. And then any other questions anybody has about what I've covered this morning. I know we covered a ton of content. This will be posted on YouTube. You can go back and review it, pause it, and listen to what I've said. So Unity, call dominated above and below spot price, above transition area. This is methodically how we look at these. Everything looks decent and supportive on you for a pullback. The only thing I would say is PGEX is 37 and COI is down at 30. So call speculators are really not speculating to the upside significantly. Same thing with this expiry. You do see PGEX at 37. You see COI at 43. But you see a large amount of in-the-money puts overhead, so it's going to be difficult to move up in you, at least through this expiry and all expiries. So hopefully that helps there. UNH, let's check that one out. Call dominated above and below spot price. Extremely wide transition. That's that gray box, so significant uncertainty with positioning. We do see PGEX and COI 400, so that'd be the upside speculation area I'd be looking at. For all expiries, structure looks fairly good. For this expiry, 370, PGEX, COI up at 400, probably not a likely area. So 370 for the upside for this monthly expiry. I think would be where I'm looking. The expected move is 14 points or 4%. So that puts you right around the 370 area, 375 area. And then after this expiry, let's see what we look like. So PGX COI actually move up. So the structure continues to advance, indicating call speculators are advancing to the upside. So UNH looks decent. AMD, let's look at this one. So call dominated above and below spot price. I know AMD had a significant move to the upside, I think, on AI news, right? So PGX is 230, COI 250. Everything looks good on that above transition. So any pullback to transition, I would assume, would be supportive. Monthly expiry 230. So that'd be your upside target for PGX. COI 250, probably not attainable. And you see COTMC up there. And the next expiry 230. PGX not advancing rapidly, so we need to see PGX and COI start moving up towards that 250 area. But again, AMD looks great. Structure looks good. KMX, that's CarMax, right? Yeah. Low OI, only monthly expiries, so I'd be a little bit hesitant about the positioning. Dealer control on CarMax. That said, 50 is PGX. You see, you don't have a lot of option speculation to the upside or to the downside to be able to look at via the net OI. You want to see this significantly higher, 136,000 here. So 50 basically to the upside. You're within the overall transition there. I just assume CarMax is probably not going to move very rapidly though. So let's look at Tesla. I already looked at Tesla. I actually posted on Scott Redler's thing this morning. Tesla looks great for 450 to the upside. Call dominated above and below spot price, above transition. Looks good. 450 again, PGX to the upside. Speculation 440 might see some overall interaction there. That's that next highest gradient. 450 PGX COI. So 450 looks like the upside target after this expiry on out into the next expiry. Expected move obviously is 60 points. It's a high beta stock. So you're looking at 13%. So speculation to the upside, pretty significant there on Tesla. So everything looks good on Tesla for a move to the upside, at least supportive on pullbacks also. NBIS, I don't know if that's in our, it is actually, okay. All right, so let's look at this all expiries. Call dominated above and below spot price. You're above transition. Everything looks good. Significant speculation to the upside towards 140. So 135 would be the first area I'd be watching, and 140. 140 again for this expiry for monthly. Transition widens a little bit, and you're within the overall transition, so it could be a little choppy there. You need to at least get above P-trans, which is the top of the transition area. Next expiry, 140, 145, next gradient. You do see COI drop to 130, though, so you'd like to see that move to the upside. So, Infinite Dream, we covered SPXP and SPXA already. Do you want to look at SPX combined? Is that what you're asking? I've covered SPXE and SPXA. Could you remind us how you recognize data for SPX? Are there different instruments or intern filters? So SPXA is the AM expiries. SPXP is PM expiries. Yes, we differentiate that in our web app by putting in SPXA or SPXP. Hopefully that helps you on that. And all of our tools, you can put in SPXA and SPXP following the code. So if you're doing delta balance, it would be $DBH SPXA, $DBH SPXP. Yeah. So Infinite Dream, SPX is combined. So here we go. Preferably, yeah, you can look at the SPX combined, but we prefer to separate it. So again, all expiries, call dominated above and below spot price. You're within the overall transition. Significant puts within the overall structure, though, as we've seen the past few days. Yeah. So I prefer to separate it, though, because combining the SPXP really doesn't help you, right? You want to remove the SPXA, which now we do have the monthly expiry, but the SPXA is not controlling the shorter term price action, right? Because it's doesn't expire for the monthly, and that's institutional positioning. Institutions are not moving in and out of the market with that SPX option structure. That's why I like to remove the SPXA. and give me the SPXP, because that's what's driving the bus in the shorter term. SPXA is our 40,000 foot view driving the bus longer term. That's where we're going if we're driving to, California. SPXP is telling me where my rest stops are and where the short-term interstates are going to take me, and then obviously the ultimate destination is where you're ending at. So, yeah. So, all right. Thanks everybody for joining us. I know this was a long run this morning, but I appreciate all the interaction. Again, like and subscribe on X as well as YouTube. You'll be notified when we go live with our intraday content as well as our post-market prep. And then review all of our stuff we posted before, how we came up to the sell-off on last Friday, as well as all of our blog posts. Again, significant education. And come join us in our Discord. 14-day free trial, all the tools turned on. Kick the tires. Let us know what we can do better. Yes, exactly. Yes, that's why we separate. So, yeah. So, all right, everybody, make it a great day. We'll see you later. Thanks.